Today, we're going to be talking about the top 3 growth stocks that I've had on my watch list lately because I think they have really good 3 to 5 year potential. I'll briefly explain what I mean by growth stock just so we're all on the same page, and we'll dive into each company to see what the investment opportunity is like. I do personally own 2 of these stocks that I'm going to be going over in this video, and for each of them, I'll be going over my personal position. If you're new to the channel, my name is Sheldon, and I have been personally investing and managing my own portfolio for a little over 4.5 years now, and I make YouTube videos talking about stocks. If you're interested in growing your own portfolio, subscribe to the channel and let's all learn and build our portfolios together. And please do not go out and buy these stocks just because you watched this video. Use this as part of your research, not all of it. So let's get right into it and what actually is a growth stock. According to this definition on Investopedia, a growth stock is any share in a company that is anticipated to grow at a rate significantly above the average growth for the market. So for example, if we look at the average revenue growth rate for all companies in the S&P 500, which is 5.2%, and compare one of the stocks that I'm going to talk about in this video, which has revenue growth of 27%, we can safely call that a growth stock. I do think that it's important to look at something like sales growth and revenue growth when you're analyzing growth stocks and not just something like net income, because you can technically grow your net income without actually growing revenue and growing market share just by reducing expenses and just by making your company more efficient. So I mean, all of this is important to look at, but it's just something to keep in mind. Growth stocks will also typically have a much higher PE ratio than, say, value stocks because they have the potential for high growth. They command a higher valuation. Growth stocks also typically don't pay a dividend because the company is focused on reinvesting all of the money that it makes back into the business to grow. It's typically not focused on paying back its profits to shareholders. So the expectation with growth stocks is that you're going to get the majority of your returns from capital gains and not dividends. Hopefully that quick explanation made sense and put us all on the same page. Now let's get into the top 3 growth stocks in this video, and it doesn't really get more growth stock than the first one. Palantir at a high level is a data management and software company that specializes in AI and big data analytics. They also build software for the military, and they're a very cool company ran by some of the smartest founders in the world like Peter Thiel and Alex Karp. Seriously, if you're interested in investing in Palantir, I highly recommend that you check out some Alex Karp interviews or go find a podcast where he's talking because the dude is just wicked smart. To look at some of the financials for Palantir in their Q2 2024 highlights, their revenue grew 27% year over year to $678 million. They're also starting to grow their commercial revenue now a lot faster, and that grew at 55% year over year to $159 million. And their government revenue grew 24% year over year to $278 million. So they still have a majority of their revenue coming from the government, but they're starting to ramp up the rate that they're growing their commercial contracts, which I think is a really good idea for the longevity of the business. Their customer count also grew 41% year over year, which is huge, especially because a large majority of those customers are million-dollar contracts. So total revenue for Q2 came in at $678 million, and they're expecting some growth in Q3 because their outlook, it says they're expecting between 697 and 700 million, so in their next earnings report, I guess we'll see where they land, but I definitely think the growth is going to continue for Palantir, and they're easily going to hit their growth expectations. Basically, it's growth across the board for Palantir, and luckily this is a stock that I've been invested in, and it's been my most successful investment since I started buying stocks. I currently own 160 shares of Palantir at an average price of $8.30. I'm up 283% on the position, and that that is almost $4,000. I have no plan on selling these shares anytime soon. It's a great company in an industry that I believe in, and I'm going to continue to hold these shares into the future. So to move on to the next growth stock, this company has revenue up over 12% year over year, and net income is up a crazy 240% year over year, which is just absolutely insane. And you can probably tell by the slides, but yes, we are talking about Amazon. Obviously, if you're watching this video, you know Amazon, and it's one of the biggest e-commerce providers in the world, and one of the biggest cloud providers in the world as well. The supply chain and warehouse capabilities Amazon has built out is pretty incredible, and they're making a push to automate their warehousing and supply chain as much as possible, and are definitely a global leader in that area. They also have some of the most powerful data centers in the world, and are one of the biggest companies to work at if you work in tech, so they have lots of talent and some of the most talented developers in the world. This is a pretty crazy slide, but Amazon has managed to up their free cash flow 572% year over year. This is basically unheard of, especially for a company the size of Amazon, but it just goes to prove that you can still be a trillion-dollar company and be a growth stock. The stock has recently dipped as well, presenting a potential buying opportunity, which is interesting. I don't currently own any shares of Amazon, but it has been on my watch list for a while, and I would like to eventually start a position in the company. This last stock is one that you probably haven't heard of, but it operates in the space technology sector, and it's a Canadian company. We are talking about MDA, and it's by far the smallest company on the list at only a $1.78 billion market cap. They mainly design and manufacture space robotics and satellite systems. They have $860 million of trailing 12-month revenue, which is up 13.86%. It's currently sitting at a 39 PE ratio with a forward PE ratio expected of 22, so it's looking like the valuation is coming down on MDA, which could be good if you're looking to get into the stock. And honestly, MDA just builds some really cool things. They're responsible for the Canadian arm on the International Space Station. They also have sensors and robotics on Mars that have been operational since 2008. They have customers and are partners with some of the biggest companies in the world like Airbus, NASA, Blue Origin, Boeing, and have 55% of their revenue from commercial and 45% of their revenue from government contracts. And to be honest, I might be a little bit biased when it comes to MDA. This is a company that I just find really cool. I'm currently an electronics engineering student, so anything electronics and anything space related, I kind of nerd out about, and it's something that I just find really exciting. And I do currently own a few shares. It is a relatively small percentage of my portfolio. I only have 74 shares at a cost basis of $11.11. Since I bought the stock, though, I am up 34%, so in hindsight, you know, I should have bought more, but is what it is. And just like Palantir and Google, I have no plan on selling, and if anything, I want to build out my MDA position a little bit more in the next few months. And those are the 3 growth stocks that I wanted to talk about in today's video. I'm curious if you have any other growth stocks that have been on your radar lately, or if you've been buying anything. Let me know in the comments below. If you got any value out of the video, consider dropping a like and subscribing for more finance-related content. As always, I wish everybody the best of luck on your investment journey. Peace.